Welcome to Multiple Perspectives. This is your weekend view where we bring you the latest insights and trends in real estate investing. I'm Ashley Shoemaker. Today, we're diving into the latest economic indicators and what they mean for the real estate market and investors like you. Our focus today zeroes in on the recent Consumer Price Index report. In January, the CPI highlighted a sharper than expected rise in consumer prices, underscored by a significant uptick in rental housing costs. This surge is not just a statistic, it's a signal, especially for the commercial real estate market and investors navigating these waters. The CPI's revelation is critical for several reasons. First, the increase in rental costs reflects a tightening housing market where demand outpaces supply. For investors, this scenario often signals robust rental income potential, particularly in multifamily and extended stay segments, which have shown remarkable resilience. In the context of EquityMultiple's investment landscape, the CPI report underlines the importance of strategic investment in properties with strong rental growth potential. Take, for example, our recent offerings in multifamily developments. These are not just buildings, they're opportunities to capitalize on a trend that the CPI report has brought into sharp relief. But what does this mean for the broader commercial real estate market? Historically, real estate has been a hedge against inflation. With rental rates on the rise, multifamily real estate investments in high-demand areas can offer both protection against inflation and potential for significant returns. It's also a reminder of the importance of location and sector selection. The surge in rental costs highlight the growth potential in markets with strong demand for housing. EquityMultiple's focus on properties in vibrant urban centers and high-growth regions aligns with these trends, offering investors a path to capitalize on the current economic climate. As we navigate an environment of rising consumer prices, the role of informed strategic investment becomes even more critical. For those looking at the real estate market, the recent CPI report isn't just a beacon, it's a guidepost for where and how to invest. EquityMultiple remains at the forefront, offering access to curated, high-potential real estate investments that are positioned to thrive even in the face of inflationary pressures. From multifamily housing to extended stay hotels, the opportunities are designed to align with the very trends the CPI report has highlighted. Thanks for joining me for the Weekend View. As always, if you have any questions, you can reach out to us at ir@equitymultiple.com. See you next week.
This communication is not to be construed as an offer to sell or the solicitation of an offer to buy any security or provide investment advice. Any such offer or solicitation can only be made by means of the delivery of a confidential private offering memorandum. To the extent that performance information is contained in this podcast, past performance is not necessarily indicative of the future results, and all figures are estimated and unaudited unless otherwise noted.